Connect. And today I want to provide an update through January here on capital markets, stock market, bond market, and just economy in general. You know, there's an old Wall Street saying, as goes January, so goes the rest of the year. It's there to imply that the stock market performance in the month of January tends to have this predictability, this power of assessing what's likely to happen throughout the remainder of the year. And although there's a marginal statistical merit to the outcomes that happen, the activity thus far in January has been very, very surprisingly positive. Positive in the sense that the average stock has actually outpaced the broader S&P 500. Meaning this concentration of that artificial intelligence exposure in the S&P 500, right? The technology-based overweighting and concentration in the S&P 500 has actually performed on a marginally lower rate than that of the average stock in that broadening structure. We're also seeing stocks in the mid-cap and small-cap sector of the US equity markets actually performing relatively well. Now, why is this important? Well, the significance of what's called this breadth expansion, this participation of returns by more than just a few names in the market, tends to promote a kind of rising of the tide in aggregate. This is important because it has implications to earnings expectations, it has implications to future economic labor market conditions, expectations on consumer sentiment, and much more. When this has happened in the past at such a very pleasant rate as we're seeing right now, it does tend to promote a relatively healthier equity market over the next 6, 9, or 12 months. And if you recall from our view of 2026, which we released last month, we do foresee an equity market participation structure in 2026 that is likely to outpace that of a fixed income allocation. There continue to be more risks in our view in bonds than stocks in 2026. In fact, the inflationary data that we've learned so far in January, although it has come in as expected in terms of a continuation of a decelerating inflationary backdrop, the bond market has not responded on an expected basis as some may have guessed. This idea that interest rates are going to perpetually drop or even yields come down meaningfully lower has not materialized, and the market is starting to reprice the expectation of that. Meaning, the great returns in bonds that we experienced in 2025 have now a diminishing profile here in 2026, and we continue to believe that equity market participation, driven by objectivity and the data set, is likely to reveal a better outcome for investors. As we step back and look at the economic developments here in January thus far, the trend of the labor market remains sustained, right? The rather cooling of the labor market, or rather the diminishing profile of not as many jobs being created on a consistent basis, that is coming into fruition. And as we've stated numerous times in the past, a cooling labor market doesn't mean a stalling labor market. Those are two drastically different components, and the pace of that cooling is actually being supported by other data, being supported by new efficiency metrics within a lot of these organizations using artificial intelligence, productivity gains across the book, and just overall consumer sentiment, which has notably stabilized. As we look ahead to this first quarter, our positioning remains solid. Our positioning is favoring equity market participation. We are favoring the large cap space more so than those smaller companies, although any continued broadening rather, that generates a trend here for the month of February, which would imply a 3-month solid trend, is going to be reason enough for us to re-examine allocation structures and truly pivot for what may be the January effect for stocks into 2026. And as always, it's important to reiterate that we are a planning first firm in our approach to risk management and asset management. The investment management platform is a tool, a very important tool in the aggregate execution of the financial plan. So as you have questions about the markets, as you have questions about your plan and your unique situation on how you're allocated and what that means for you, please don't hesitate to reach out to your advisor. We're always here to guide you throughout life's most important financial events.